Hey everybody, this is Jose Blasco. We are about to get started. Can I have a quick confirmation with a quick message on the chat box? I'd like to know if sound is good and you hear me well. I believe all is good. But before we start, as always, it's a good thing to have a quick confirmation from your end. A quick hello would do on the chat box. That would be great. Thank you so much. I will also put myself here on the bottom right corner of the screen so I can say hello in a more proper visual manner. And as you can see, we just reached the top of the hour, so it's time to begin. My friends, we are live. Welcome to the session, everybody. My name is Jose Blasco. Today is October 27, 2020, and I will be conducting this get-together trading session for short-term purposes. And when that's the case, normally what we do is we focus on futures and Forex. We are looking at markets that trade many hours a day, so we can be active for an intraday point of view. And we are looking at leverage as well as, as I just said, markets that are often many hours a day, so we can accommodate to those intraday trades in a way that is safe, with gaps under control, risk management in place, etc., etc. Okay, so let's begin. Before we start, I would like to also highlight the disclaimer. So notice I'm going to highlight the disclaimer right now. As you can see, please read it carefully. This is important information. I am counting on you to read every single word of it. It's quite short, to be honest. So I think it's not a big issue or a big demand from my end for you to read it carefully. It's important that you are aware of this financial disclosure because when we trade, money is involved. And therefore, I am counting on you guys to be properly prepared to click the button. If you are not properly prepared, certainly you can rely on us. As you know, on our website, you can find courses and all sorts of materials and tools that can help you developing yourself. But even if you got the knowledge, for example, so it could be that you are at a stage where you should be using paper money or you should be using real money, but very small size. So again, everybody in the group, it's probably in a different place, in a different level, trading a different asset. And there are certain decisions that you have to be the one taking. So while I'm going to be here to guide you and answer your questions and everything else, of course, I am counting on you to be prepared based on what I just described. And that's why this disclaimer is so important. Okay, very good. How are you, Fermon? Good to see you. Good to see you, everybody. My friends, the session is now on. I'm just going to close the introduction slide so we can jump into our trading platform and begin the trading day. Okay, so notice that the first thing that you see on the screen is TradeStation. Okay, so let me close that pop-up window. We don't need that one. Here we go. So the first thing that you see here is TradeStation. It doesn't mean that you need to use TradeStation in your trading. Actually, you could also utilize TradingView. I will actually be alternating between TradeStation and TradingView. Now, every platform out there in the world got pros and cons, like everything in life. Like if you were to think of the car you drive, so there are other cars, and every car, every model, every maker, creates vehicles that with advantages and disadvantages, and in the end, it's our preferences that set which vehicle we drive. So trading platforms is kind of the same thing, right? So one great characteristic of TradeStation, which I'm going to use in the session today, it's the fact that TradeStation has something called radar screens, which is what you see on the screen, meaning that instead of looking at charts, which we will do, but instead of looking at charts, you are basically running your charts and the analysis in a simple and if you wish, a row, like if it was a spreadsheet, right? And then we got these color-coded alerts, which basically are very convenient because they save us time in the process of planning trades, and they don't use real estate on the screen, right? Of course, at home, you may be trading using multiple computer screens. That's pretty normal thing and it's fine. But what if you don't have multiple screens, or let's say you are traveling, or in my case, I am streaming my screen on YouTube, so I can only stream one screen at a time. So again, this is very convenient to be able to use radar screen to kind of compress all this market data and help you to analyze better and more efficiently. Okay, so I'll jump into the charts in a minute, but before I do, I also want to point at the fact, especially if you are new to the sessions, that on the left I have futures markets. In the middle part I got Forex. Also on the right I got Forex. Okay, also on the right I got Forex. But notice how the currency pairs on the very, very right are what we call the minors, okay, or cross pairs if you wish, where the ones we got in the center not like that. The ones we got in the center are the majors, okay, the majors, which are the most liquid currency pairs in the world. Okay, so again, and on the left, we have futures, which are, you know, a diverse set of markets, such as commodities, treasuries, equity indices, etc., etc. Okay, so lots of different types and diverse opportunities in front of us with all those flashing alerts. And what I'm going to do is I'm going to start from left to right. So I'm going to start looking at futures markets, see if opportunities are available, and, you know, if they are, we'll plan for it. Ideally, we'll execute them, and you can practice with me. And if not, then we'll move into forex, and, you know, we'll keep going back and forth, you know, from chart to chart. My priority will be to go from left to right, and also from top to bottom. Okay, why? Because futures creates more diversity than forex. Forex is currencies only, which is a fantastic market to trade, but it's all currencies. Where with futures, I got, you know, crude oil, gold, the S&P, so I got more diversity. So I'm gonna have more emphasis on futures, assuming the market allows me to do that, and a bit less emphasis on forex, even though forex is amazing. So we'll be looking at all. And also, I'm going to have more emphasis on the shorter time frames, 15 minutes instead of 60, instead of 4 hours. Okay. In the center part, same story. So we got on the center part, 60 minutes, 4 hours, and daily. And then on the right, I got 4 hours and daily. And notice I don't have 60. Okay. I don't have 60 on the right, just like I don't have 15 in the center part, where on the left I got 15, 60, and 240. Okay, so why is that? Well, because I'm going from more liquid to less liquid. I'm also going from centralized products to non-centralized products. Forex is a non-centralized market. It's an interbank pricing structure, where when you trade futures, you trade in an exchange. Could be the NYMEX in the East Coast, could be the Chicago Mercantile Exchange in Chicago, etc. And therefore, you benefit from the same price no matter the broker you use, and you benefit from a regulated environment. So I want to give priority, and therefore I am okay to go to lower timeframes in centralized environments, where the moment I move to the Forex world, which is decentralized, then you could go to a lower time frame if you use an impeccable broker. But again, to keep it safe for everybody, the lowest I will go is to the 60-minute time frame, and from there we'll plan our trades. Okay, very nice. Good to see you, Ellen. Very nice to see you and have you in the session with us. Thanks for that. So let's begin. Okay, so let me freeze the screen and zoom in. Okay, I'm gonna start with the futures markets, 15 minutes. And what do we have here? We have near sensible. That's what I'm looking for. Near hopeful. I'm not looking for hopeful. I'm looking for sensible. Again, if you don't know what that means, we can talk about it at another time. But, you know, I guess it's common sense. Near and sensible are the two words I'm interested in. And also notice that sometimes under the climate column, we get gray boxes. Okay, by the way, I'm using AutoClimate, right? And AutoClimate is an app which is free for all of you to use. So if you don't have AutoClimate or you don't know how to get it, just type it on the chat box and I will lead you. Again, when the climate is gray, it means the climate is not confirmed, and therefore you would pass on the trade. So what I'm looking for is near sensible, and I'm looking for a colored box under the climate column. That's what I'm looking for. And we do have that with the euro contract, which is a futures markets to be traded. Okay, so let's go ahead and load EC 15-minute time frame. EC, that stands for euro contract. And we're going to plan the first trade of the day in this way, assuming the market is giving us permission to do so. Okay, so we'll be assessing that particular market opportunity. Okay. Looks to me like we don't have an opportunity. Okay, not right now, but again, let me comment on this properly. So first of all, with the euro, the first thing that you can see here, I'm loading the 15-minute time frame, right? And you can see the current climate is giving us a thick and red dot, and that means the climate is confirmed. The euro is in a down climate. Okay, so statistically speaking, we have a statistical advantage by shorting the euro right now in this time frame. But of course, you don't want to short forever. Everything got a beginning and an end in life. So statistics suggest that a normal thing to happen for the euro will be that the euro remain in a down climate for 5.41 candles. We always run this up to the next full integer number, such as 6 in this case. So you would expect the euro to be in a down climate and fall for 6 candles, where every candle is 15 minutes. That is 1 hour and a half. This is what statistics suggest based on autoclimate. And again, what's important about this is that, of course, it's statistics, it's not a guarantee, but it's a good thing to understand, because you know what to expect from a statistical point of view, not only because of a biased opinion, but because of a statistical point of view, and relying on that certainly puts you at an advantage. Okay, now this is not the only reason why we take a trade, but it's good to know that given the fact that this climate has been propagated for 3 candles, and statistics suggest it could be 6, right? So it's been running for 45 minutes already. 3 times 15, that's 45 minutes. So because we concluded it could run for 1 hour and a half, so if I was to take a trade now, I could be in a trade for another 45 minutes, riding the move on the euro to the downside. Okay, so looking good for me to continue planning on this trade to short the euro. Now, if we're gonna do that, we need to do that at a price point where, number one, the price point that we select for our trade is lining up with our reference value, which is 118.38.6. And here's the key: we need to find red UFOs like the ones we have here on the screen on the top, okay? But those red UFOs in this case are located at 41.43. That is not 38.6, isn't it? So those UFOs are not in the right place. What we need is UFOs lining up, around 118.38, which would be somewhere here. Okay. Now, do we have that UFO? No, I just made it up. I just draw a circle on the screen just to be visual. But that UFO does not exist. I just draw it manually, right? So what are we looking for? So we are looking for a UFO lining up with this value of 118.38.5, ideally 118.38.6. Unfortunately, none of the edge time frames charts on the top are providing that red UFO. The red UFOs we have are there, but they are located at a higher price point, which is not enveloping our reference value. Okay, therefore, no trade on the euro right now. Okay, now a classical reaction to what I just said, if you were to be a brand new trader, is, oh, I just missed the trade. Oh, no trade. Oh, I wasted my time. Oh, whatever, right? And again, this is this is a normal thing, because we are human, and maybe we sometimes we lack patience, for example, or something like that. It could certainly happen, isn't it? I mean, I don't think I'm the only one. So while that's a normal human thing, when you trade, you want to certainly get your trading emotions under control. And in this case, lack of patience, lack of discipline, eagerness to get into the next trade, fear of missing out, all those human emotions is something that you have to take to get under control by simply understanding the rationale behind you accepting a trade. And the rationale for us to accept a trade is that probability is in our favor. So in this case, do we have probability in our favor if I was to take a trade on the euro now? And the answer is no. I mean, we do have a little bit of probabilities in our favor, in the sense that the climate is a down climate. So if you were to short the euro now, there is somehow a possibility for the euro to begin falling. Okay, and if that was the case, of course you will profit. But is there any clear, specific force located where the current price is that is going to move the prices down? Well, no, it doesn't look like it, because the forces that move prices up and down, which are the on-field orders, are located at a different price point. Okay, and therefore taking the trade now really would be a very hopeful action, where you expect something to happen just because you want to, instead of just because market data is telling you that something is likely to happen, which is when you have probabilities, right? So what do we do in cases like this? Well, we just wait, and we wait peacefully, and there is no reason to despair or lack patience. Trading is a waiting game, like fishing, like hunting, like business. It's a waiting game. We need to wait for the right opportunity. Traders, we should be spending most of our time waiting and the least amount of time trading. That's the characteristic of a trader looking for quality. If you were to trade most of the time and wait the least amount of your time, that means that you trade quantity instead of you trade quality, and quantity equals low probability, which means that probably you can hurt yourself if that was your approach, unless you get lucky. And if that's the case, probably it's not going to last forever. Okay, and I don't mean to be negative, but certainly add a little bit of wise comments when it comes to trading and markets, coming from experience. And if you have traded for a while, probably you know exactly what I'm talking about, and some of the things I mentioned happen to you. If you are new to trading, well, hopefully you are now embracing those thoughts in an early stage of your education, so you don't need to make mistakes and waste your money in the market to learn the lesson. You can just listen carefully and be diligent with what I just said. Okay. Anyway, so now one last comment before I move to the next market, because obviously we don't have a trade on the euro, so I am looking forward to getting to another chart. Okay, I want to make two more comments about the euro before we move on, which is number one, a UFO may form anytime. Okay, especially the time frames on the right, which are tick charts and share bars. Those time frames are not depending on time, like the one on the left. Okay, the one on the left is a 2-minute time frame, so you would expect UFOs to form every X amount of minutes. But the ones in the middle on the right, they are not depending on time. And really, it happened many times actually, where I was making a comment such as the one I'm making right now in the session, and as I was speaking, a UFO just formed in front of us. So it could take literally seconds, maybe minutes, but it could take seconds for a UFO to form. Okay, so again, if the fact that you don't have a UFO doesn't mean you are not going to have it just a little later. So if you do this at home, it is indeed convenient when you identify a possible market opportunity that you go ahead and you keep that chart on a different computer screen so you can monitor that easily, because anytime a UFO could form, the app will pick up market data, and if on-field orders are identified, automatically a UFO will be plotted. So you have to be watching this, okay? Just like you would watch if you were fishing or you were, running a business and there was an opportunity and you wanted to acquire new customers in whatever business that is, you would obviously need to watch your business, right? So same story here. Last comment, and I'll move on from the euro, is that every 15-minute time frames, of course, we're going to be reassessing the climate. Okay, and in this case, the last time that we hit 15 was at 11:15 a.m. in New York, which is 2 minutes ago. So what happened 2 minutes ago? Well, if you notice, 2 minutes ago, we changed our climate from red and confirmed to blue and thin, which means it's an up climate, but it's not confirmed. Okay, so what should you do? Let's say we had a UFO before, and let's say we had a trade, we had an order waiting to get filled. What should you do right now if you see this? You should just go ahead and click cancel, because the climate in this current condition does not give you an advantage. Being a buyer seemed to be the choice instead of being a seller, but because the climate is not confirmed, even that choice is not a choice that implies a great amount of probabilities in your favor, and therefore the wise choice would be to simply discard the euro for 15 minutes of time and reassess the climate 15 minutes later. Okay, cool. So anyway, a long explanation in this first attempt to plan a trade. Again, we are a mixed group of traders, isn't it? Some of you may have been trading for a while and have been in the channel with me for a long time, so probably this was quite slow for you. Some of you may be new to the channel, and therefore you needed that explanation to be able to follow into the next trades I am about to begin planning. Okay, so what do we have right now if I was to look at the futures markets in the 15-minute time frame? Okay, well, we got nothing. Nothing is golden color as a condition, as an alert, and therefore could you load charts and plan trades? Yes, but because price will not be near, you would likely waste your time planning a trade to then see the market condition, the climate change, or something like that, and then next thing you know, you just put time analyzing a chart and planning a trade. That was not useful at all. So what am I going to do? Well, while I'm waiting for an alert to show up, which I'm sure is going to show up anytime. Okay, for example, here the Nasdaq with an 8-year spread of 0.6 it's likely going to show up an alert soon. The moment it hits 0.5, it's going to show up an alert. Okay, why 0.5? Well, because that's my setting. So if I right click, studies, edit auto climate, notice that, okay, did I do it right? Edit auto climate, here we go. So if I look at my inputs, my ATR alert is set at 0.5. So in other words, when it hits 0.5, I will get the alert, okay? So notice the Dow Jones is 0.59, 0.6. So again, we could have an alert anytime. Now, I'm not interested on the Dow Jones because it's hopeful, but if the NASDAQ gives me an alert, it's sensible. So we may have a trade to plan on the NASDAQ in a minute, okay? Now, while I'm waiting that 1 minute, because it may not happen, we never know. So what I'm going to do is I'm going to move into the world of currencies, okay? And here is now my approach to looking at opportunities on the currency markets. So we got near sensible. Notice the Aussie US dollar and the Euro US dollar, okay? Notice those two have a climate which is gray color. So the climate is not confirmed, so I will not bother. But notice that the one on the top, which is near sensible, the US dollar, Canadian dollar, that one has a colored box, meaning the climate is confirmed, and because it's red, is a confirmed climate to the downside. So we want to be shorting the Canadian dollar, okay? As well as the Swiss franc, maybe too. It was flashing a second ago, okay? So let's go ahead and begin planning our trade with the US dollar, Canadian dollar. Okay, US dollar, Canadian dollar. And let me move here to, I need to connect to paper trading. Exactly. So that way, when I connect my trading view to paper trading, what this allows me, it allows me to go ahead and use the tool here on the right, which is known as the order panel. Okay, you could open, you could turn on, turn off, hide or unhide the order panel when you click on that double arrow here on the right, and this is going to help me to plan my trades. Okay, so notice I just typed US dollar, Canadian dollar. I have it here, and again I want to go back very quick to red screen because the opportunity we saw is based on the 60-minute climate. Okay, so if I go back to my trading view, notice that the way I have this set up is on the left I got 60-minute setup combined with 8 minutes. That's the one we're going to use because it's the 60-minute setup. But also notice I got the 4-hour and also I got the daily, okay, which those charts could be useful for when I'm looking at 4-hour opportunities, daily opportunities, but it's not what I'm doing now. What I'm doing now is I'm looking at the 60, and therefore what I need you to do, guys, is I need you to ignore the charts on the right and exclusively focus on the charts I got on the left, okay? That's what we're gonna do. And so let's begin with our assessment for the climate for the Australian dollar, Canadian dollar. And notice that when I look at the climate on the 1 hour time frame, so 1 hour, 60 minutes, so we have a thick dot and red. We knew that, okay? We knew that because of the red screen. It's a down climate and it's confirmed, okay? Now, the current climate has been running for 5 candles, and statistics suggest that for the CAD in this time frame, down climates tend to last 7 candles, okay? 7 hours. It's been 5 hours like that, and those climates tend to be 7 hour long. So in other words, if we catch a trade on the CAD, we can still be on a trade for another 2 hours. And that would make us very happy, isn't it, as an intraday trader looking for an intraday trade, which is what I'm doing right now. So with that in mind, we are opening the door to shorting the Canadian dollar. We want to short the Canadian dollar only if we find UFOs located around 131.75, which is the reference value set by our EMA, which is the black line. The current price of the Canadian dollar is 70. Okay, so Canadian dollar is just a bit lower than 75. Our reference value is 75. Okay, so now it's a good thing to have a reference value, but it's not useful unless we have UFOs lining up at the same price point. So do we have UFOs lining up at the same price point? Well, the answer is yes. Notice how we have a UFO lining up from 131.74 to 131.82. Okay, that UFO, it's enveloping the value 131.76. So guess what, my friends? We do have a trade. So if I was to plan the trade and I was to type the entry price, so that would be 74.2. That would be the entry price, of course, because it's Forex. And normally we deal with 4 digits, 4 decimal places instead of 5, unless it's the yen where we deal with 2 instead of 3. So 131.74.2 becomes 131.74. Okay, 131.74. And then when it comes to stop loss, okay, we want to set the stop loss to be 82.4. Okay, 82.4. But again, same story. We're gonna have to adjust that. And first of all, that's gonna be a buy stop, right? Because the stop is gonna be located above the UFO, right? So it's gonna be a buy stop. So because it's a buy stop, we need to adjust it up. So 82.4 becomes 83, right? And not only that, okay, not only that, because it's a buy order and we buy from the ask where the Forex charts are the bid, since it's a decentralized product, so we need to add 2 pips, so it's going to be 85. And not only that, because of the decentralized nature of Forex trading, we need to be very careful since different brokers may have different prices. So a safe measure to be very safe, and you could have a rule which is a bit less conservative than mine, but in my case, I'm just going to add another 5 pips, bringing this to 131.90. Okay, so basically, we're going to be shorting at 74 with a stop at 90. Okay, so our entry short is going to be here. Our stop, notice, is going to be all the way here at 90. Okay, again, to absorb the fact that this is a chart that shows the bid, where a buy stop would get filled at the ask price. This is the bid price. The ask price is higher. But on top of that, we are also adding those additional 5 pips, which is breathing room to absorb and accommodate for the decentralized nature of Forex trading. Okay. And again, if you're new to trading Forex, you're not used to this concept of using decentralized markets. In our website, actually, let me show you that very quickly. So tradewithufos.com. I'll divert just a second, speed of the light. So if you get into join, here we go. So you have Forex courses. So you can pick any of those courses, and you will be properly explained the rules I just used. And so on. Okay, so you can certainly take a look at that. So what else? Okay, so again, I'm going to be just a bit skeptical when it comes to the location of the stop. And apart from looking at the 8-minute time frame, I also want to look at the 8 ranges time frame to see if placing my stop at 131.90 could be problematic. Okay, so let me go ahead and switch to 8 range time frames. Okay, and let me go ahead and move these up to see if we got UFOs around 90. Okay, and notice that they are none. The lowest UFOs that we got there is 85. Okay, and my stop being 90, it's indeed above 85. So great location for the stop. That stop is above the range UFOs as well as the minute UFOs. Okay, and in that sense, that's a valid location. By the way, we are meeting entry right now, so it's time to take this trade. Okay, so let's complete the planning of the trade. So I need to find a target for the trade. So notice how I am turning on AutoUFOs as well, but I am doing this on the 60-minute time frame, right? And the 60-minute time frame is showing me a target to be located at 131.32. And remember, it's a buy order, so we need to adjust this to 4 decimal places, so running up to 31. And because it's a buy order, we need to add 2, so it's going to be 33. Okay, so in other words, we are risking $50 to make 130, okay, which is a valid, certainly a valid trade. Okay, it's a valid trade. Now, the last thing, let me write everything on the screen, okay, so that way make sure there is no mistake. So I'll start from top to bottom. So we said on the very top, we have a stop located at 131.90. Below, we're going to have a short entry, which is going to be located at 131, we said 74. Okay, so that's 16 pips. Below, we're going to have a safety target. Okay, safety target where to scale out half of the position. So that's going to be using the reference value 131.74. Okay, we're going to have to lower this by 16 pips, and if I'm not mistaken, that would be 138.58. Well, sorry, let me rephrase that, 131.58, and then we're gonna have our final target all the way located at 131.33. Okay, that would be the trade plan for this particular opportunity with the US dollar, Canadian dollar, and I'd love to get a little bit of a confirmation on the chat box just to make sure that you guys were able to follow the process I just used. I mean, the values are on the screen, so I guess that's easy to take a screenshot or make a note. I guess that's fine. But beyond that, I want to make sure you are able to replicate the process by yourself. And I just want to know if you guys were able to follow what I just did. So please give me a quick message with a yes or a no, or any comment you may have, so I can clarify before we move on into the next trade. And I'll take a quick sip of water if that's okay. Thank you for that. Cool. Okay. So wonderful, everybody. Thank you for those confirmations on the chat box. Really appreciate it. So we're gonna go back to hiding, restoring down the chart, hiding those UFOs. We don't need them anymore. Okay, I like to click my charts very clean. And again, you know, we are in a trade here. Okay, so this is a trade actually that is meeting entry as we are meeting live here in the YouTube channel. Okay, so nice one. So let's go back to look for more opportunities. Okay, so look at that, the euro. Back to the euro futures, okay, near sensible opportunity to short the euro futures. So we are back to loading the euro. Remember, the euro was in a down climate, and then it was an unconfirmed climate to the upside, and it seems that we are back to be in a down climate. Look at that. Okay, this is what we saw earlier. Then, as we were looking at the screen, it went from confirmed to non-confirmed, and now it's back to be confirmed and to the downside. Okay, so let's see if a trade is available or not. And guess what? It seems that it's not. We have the same problem we had before. So while the climate is confirmed, the reference value is 38.2, and 38.2, which is more or less what the price is, it's not providing us with any red UFO right now. Now, I'm not going to repeat what I said before because I think I was clear enough, but keep in mind that we just wait peacefully, and we know that anytime a UFO may form, okay? Anytime a UFO may form, so we are ready to take action if that was to be the case, okay? What else is available? So back to the red screen. Back to the red screen. So we just got an alert that was flashing near sensible long with the crude oil. So let's go ahead and take a look at crude oil. And crude oil, I want to, before I accept the trade, I want to make sure I double check, okay? I double check that the symbol that I'm gonna use, okay, energies, is gonna be the right one. So notice I'm using barchart.com. This is a free website, okay, so you can certainly go ahead and get yourself a username so you can do the same I'm doing. And the reason why I'm getting here is because certain commodities in the futures markets, I mean, you know this well if you trade futures, isn't it? They have many, many expiration dates, as often as once a month, some of them, not all of them. And I always want to come here to double check the letter, in this case, the letter Z or Z, because that letter represents the right contract to be used, okay? But I never fully trust what they give me here by default because it's not always accurate. So what I really like to do is to look at the volume and the open interest and make sure I point at the greatest figures, and then I look left and confirm if it's the Z or it's not. And notice it is the Z in this case. So in this case, thank you, bar chart. You are indeed giving me the right data. Okay, so now when looking at the right data, so I can see that I am loading the Z letter, so all of this is fine, and you know, with all of this in mind, so I need now to go ahead and take a look and see if a trade is available or not. And my friends, we do have a trade available here because notice that the climate is confirmed. Okay, 3 candles out of 4, so we are still on time to come in. Reference value is 39, and 39 is enveloped by that UFO, which by the way is overlapping that UFO and also overlapping that UFO. Okay, so what's the top part of this UFO? The top part of this UFO is 3903. The top part of this UFO is 3902. The top part of this UFO is 3902. So I'm going to go with 02 for the entry. The bottom part is going to be 91 because it's below 92, and this is 95, and this is 98. So the worst case scenario is 92, and I'm going to go below, so it's going to be 91. Okay, so I'm going to enter at 3902. My stop is going to be 91, right? And for target purposes, okay, I need to look at a red UFO on the 15-minute time frame. Okay, and that's going to be the red UFO. It's going to be 3964. Okay, 64. So let me place the order so I don't miss it, because crude oil tends to move fast and I may miss it, and then I'll explain the whole thing. So I'm going to place an order at 3902 with 2 contracts. Here we go. My stop is going to be 91. Okay, that's going to make my safety target to be 3913. I'll explain that later. And 64 is going to be the final target for crude oil. Here we go. I got it. Okay. I have to cancel this trade, my friends. Okay. We cannot take this trade. Bad news. I didn't realize that. I just realized it. Notice how my stop happens to be inside the next UFO. We cannot do that. Stops have to be on the white space, which is great here. But notice that in the middle part, we are now uncovering that our stop is inside of a UFO. So we cannot accept the trade. I mean, we could, but we need to move the stop all the way here, which means that now we will be risking all that huge amount, which is not appropriate for an intraday trade. Okay, so what do? Cancel. Okay, I'm just going to cancel. We almost had a trade. I didn't notice that UFO was going to be hitting 91. I thought it was 90, not 91, but actually it's 91. So we're gonna have to pass. As you can see, 91. Okay, so we cannot do this trade. Sad, but that's what it is. Okay, very good. So we'll come back to other trades. So back to the euro. Let's see if a UFO has formed or not. A UFO has not formed, and not only a UFO has not formed. Notice what just happened to the euro one more time. The climate again is still red, but the climate went back to confirm to not confirm one more time. Okay, and why is that happening? Well, that's happening because the markets are controlled by the large market players. That's maybe the easiest way to say it. But why is that happening? Okay, let me give you another answer to this same question. Well, this is happening because there were no UFOs where we needed the UFOs to be. And therefore, the market could not continue the down climate because there were no UFOs. That's why we didn't take the trade. Okay, and not only that, now we got green UFOs that just show up that were not there before, and the climate went from confirmed to unconfirmed, and probably in a few minutes of time at 11:45, which is the time at which the session will conclude, we may actually have a change of climate on the euro, and it's going to be blue again. And maybe not only blue, but blue unconfirmed. Okay, so again, change of climate there, very likely change of climate with the euro. Okay, so you see how it's important to not to take the trade just because one of our rules suggests that we have odds in our favor. We need to have all the rules of the process, being met before we execute. Okay, like we had with Canadian dollar. And you can see what's happening. Again, this is not a guarantee. It's not going to happen like that all the time. But hey, isn't it that we said this would be the entry, right? And the stop was above, and then below is the safety target, and the final target was going to be much lower. So what's happening to the Canadian dollar is falling. Why is it falling? Well, not only because the climate suggests that falling was a normal thing to happen, but also because we got on-field orders there. That is actually the key. Okay, so we didn't have that on the euro. So hopefully this visual, okay, it's such a good lesson for you to remember from today's session. And that way, whenever you are at home trading by yourself and you are feeling that fear of missing out, or you are feeling that you are lacking discipline or lacking patience in your trades, remember what we just saw today. That patience space, as you can see, the Canadian dollar didn't reach the target. So, anything could happen. Trump may tweet, and next thing you know, the market changes direction. So could that happen? Of course it could, but at the same time, you can see how the beginning part of the trade was a good one, and it has a lot to do with what I just explained, which is having the climate lining up with the EMA, lining up with the UFOs. So what else do we have? Well, we have the S&P and the Nasdaq. Okay, so let's go ahead and take a look at those two guys. And I believe that as we look at the S&P and the Nasdaq, this probably will bring us to the end of the session. So by the way, while we do that, it would be a great thing if you have any question, any comment. Maybe you just want to say thank you. Maybe you just want to say, yes, Jose, I'm getting this. I'm practicing. Things are good. Maybe you have a question. You're like, Jose, I don't get this. How do you do it? So any questions, comments, good or bad, I would love it if you could phrase them on the chat box, on the live chat, so that way I can see your comments before the session is over. Sometimes there is a little bit of latency with the YouTube streams, and I just want to make sure I read you before the session is over. Okay, so let's begin with the S&P. Okay, so what do we have with the S&P? Well, actually, with the S&P, we have a trade, even though we are very likely going to be late to the party. Okay, so I'm very likely going to miss it, but let's try to plan it, and if I don't miss it, then great. So what do we have? We have a thick and red dot, so the climate is down. It's time to be a seller of the S&P, right? Candle 1 out of what statistics suggest would be 7 candles on the way down. Okay, 7 candles on the way down. So if we catch it, we may be in this trade for close to 2 hours, and our reference value for the short would be 91.75. Okay, 91.75, where if you look at this, it's indeed inside of that UFO. Okay, so in other words, we have this UFO enveloping that value in the context of a down climate, and therefore this is a valid entry for our trade. We may need to cancel it. We may need to cancel that plan. Let me see. Let's not make the mistake I made earlier. I almost made a mistake with crude oil, isn't it? So the top part of this UFO, okay, it's 93.5. So being 93.5, my stop will need to be above, and it will be 93.75. Okay. So now the question is, what's the beginning? What's the starting price of that UFO? And I believe, unfortunately, it's going to be 93.75. Let's take a look. Actually, it's even worse. It's 93.5. Okay, it's 93.5. Actually, it's even worse. That UFO went away, which means that the app is understanding that the unfilled orders that were available are basically gone, either because they have been filled. And again, if you're in the trade, you are making some money. Okay, so great. Again, not a surprise, but at the same time, we should not be in this trade, because really the right way to do it is to have the stop all the way here on the top. So if you recall, when we had a UFO there, it was, let's call it here. So your entry would be around 90 or something like that, which 90 is more or less here. Okay, and your stop will need to be all the way above 96.5 because of what I said, where the bottom part of this UFO is 93.5. That killed us, and therefore again it's way too much vertical risk. It's the same thing that happened with crude oil earlier, same thing, but instead of to the upside, now it's the same thing to the downside. Okay, same story. Now, good news, new unfilled orders are showing up. So in 2 minutes time, when the market updates, okay, that value may be lower, and if that value is now being properly enveloped by that UFO, then you can take a new trade where your stop will now be here, your entry will be here, and this could be a much better trade where you wait for the S&P to come here, and now you're riding the move on the way down from there. Okay, so I would say that's probably gonna be a good one, and I would say there's gonna be homework for you to practice this trade, assuming the rules are gonna be met, which I would say it's looking like to be the case in 2 minutes time. Okay. Yeah, trying to catch up. Very good, very good. So we learn through repetition. Okay, so just bear with me and ask questions if you have any question, and you will get this. Okay. So now, what's happening with the Nasdaq? Well, with the Nasdaq is a different story, because the Nasdaq is in an up climate. Okay, the Nasdaq is in an up climate. So candle 3 out of 4, out of 5, is to say. So still time to trade. Reference is 54.5, and 54.5 is probably here. Okay, and I have a problem with that. Okay, I have a problem with that. Let me see. Yeah, so the beginning here is 53.5, but I'm going to call it good because the current price of the Nasdaq is 71, right? So if the Nasdaq is currently 71 and is here, and you wait for the Nasdaq to fall and fall and fall and fall and fall until it gets to this UFO, so what's going to happen to our EMA? Well, that 54 will become 53. So I'm okay with that, you know? So again, those UFOs are lining up with the EMA, and therefore they qualify as a trade. But I got the same problem, Murphy's Law, I guess, the same problem we got with crude oil and the S&P. We have it with the Nasdaq, that, you know, the risk, the vertical risk will be way too much because those two UFOs are overlapping each other. So my entry would need to be on the top, and my stop would need to be below all the UFOs, okay? Which is basically below that one, okay? All the way here on the very, very bottom, okay? So it's 1775, which is here, 1775, okay? So again, no good, unfortunately. We need to wait for another one to form. So I'm gonna conclude the session. I just want to reconfirm if that is the case or not. Well, the UFO that we had here is gone. Okay, the UFO that we have here is gone. The value went down a little bit to 91.15, but that UFO is gone. So if you are not in this trade, there is no trade because the UFO went away. Again, that's the beauty of the app, even though it's, you know, I don't know how to say it because it's actually very, very powerful that the app is basically erasing UFOs if a trade is not to be taken anymore, because the app understands that no UFOs are no on-field orders are available. So it's a very good thing. It's a bit frustrating, you know, if you are new to trading, probably that's how you feel. When you are about to take a trade and next thing you know, the UFO went away and you're like, oh, what do I do now? Well, cancel the trade. That's what you should do. The app is saving you from a potentially problematic trade. Look at what just happened. Now we got green UFO showing up. So, you know, this market may change climate in 15 minutes time. And again, because the UFO went away, you would know that and you would avoid taking a loss. Okay, so again, don't be frustrated if you ever see a UFO on the screen and you're like, yes, that's my trade, but then the UFO disappear. A normal human reaction would be like, hey, where's my UFO, right? Well, you know, just be thankful and grateful for the app helping us to avoid a potential loss. Okay, anyway, the EMA value big is the 9 EMA. Okay, so I will show you that and we will conclude the session. So if I look at EMA and I look at the settings, you can see it's the 9 EMA based on the close. Okay, very nice, everybody. So hopefully you are in the Canadian dollar trade and, you know, it's working well for you. And if you're not, it's okay. There are many more trades to be taken, but hopefully this session was helpful and open your eyes and you guys understand better the method, and more to come in more sessions. And I will see you again on Thursday. Trading options. See you then. You guys take care. Thank you for joining me today. Very good. My pleasure, my friends. Looking at your messages, it seems that all is good. Take care. Keep up the good work and be safe. You guys take care. Bye-bye.